Here with our trades is Courtney Garcia. She's Senior Wealth Advisor at Payne Capital Management and a CNBC contributor. Courtney, welcome to you. We've actually got a lot of movers today. Lululemon is up 1% now. They report after the bell today, but the stock, as you can see, down 32% this year. An opportunity to pick it up on the cheap, or are you staying away?
This is something I'd stay on the sidelines of. This company I'm very much a customer of. I like the company, but as a stock, there's a lot of headwinds that I think aren't going away. Mainly the fact that you're seeing sluggish sales and a lot of competition. So if you look at same store sales, they were up 3.2% last quarter, which was up from 2% the previous quarter, but a far cry from the double digits it was during the pandemic. And I think the question is what is going to bring that growth to justify higher valuations that it had several years ago? And not only are people focusing away from athleisure and back towards traditional wear, but there's more competition in the space. So you see things like Alo and Viore are real competition to them. And I just don't know what that catalyst is going to be. I think long term, the answer to that is abroad. You're actually seeing China, probably one of their biggest opportunities. It was only about 10% of their sales last year, but I don't think that's going to be a short-term answer for them, probably more long-term. So I'd stay on the sidelines here for the time being.
Let's move on, Court, to Applied Materials. Morgan Stanley downgrading that chip maker from equal to underweight, weak operating environment, it says, for two of its key segments. What say you?
Yeah, and this is something that is not going to be immune to some of the macro and geopolitical risks that are out there. So when you're just looking at the chip space in general, you're seeing higher inflation, you're seeing interest rates that are, probably not going to come down as fast as people hope. That is going to affect some of these cyclical sectors. But this also is a company that is really well positioned to benefit from that artificial intelligence demand that is likely going to continue here. I mean, this is a big secular story, and they're well positioned not just here, but they have a lot of opportunity in Europe and in Asia, which is great for the global demand, but also can be an issue for them geopolitically because about 30% of their sales are in China. So that is a big political football right now that it can absolutely affect a company like this. So I think this is something that's definitely worth to hold for the long run, given all the artificial intelligence demand, but it is going to have some volatility here. So keep that in mind. I think you hold it for the long run, but know that there is absolutely going to be some short-term risks there.
Let's move on to Brown-Forman then. They make Jack Daniels and other whiskeys like Woodford Reserve, and it's on pace for its best day in more than 4 years because demand in that Woodford Reserve brand helped fuel an earnings beat. This is triggering a lot of discussion across the industry, Courtney, about whether spirits, I guess we call them, are kind of going to make a comeback. Would you pick up the stock here?
Yeah, I think this is something you want to see as a buying opportunity. Even though it's up almost 10% today, it's still down more than 20% this year. And I think there was a lot of concern of especially younger generations. Are they going away from alcohol towards things like cannabis? GLP-1s will affect this also. I think seeing their earnings beat is showing that that's probably not going to be a short-term issue here. There is still a demand for this, and more than half of their sales are abroad. So this is kind of a global phenomenon. So I'd pick this up as an opportunity.